following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials down 68, NASDAQ off 15, S&P's down 9, gold contract trading down $5.10 at $1,313 an ounce. Silver up 3 cents at $18.61 an ounce. Platinum down $6 at $1,050 an ounce. Copper flat at $2.07 a pound. Light sweet crude down $1.67, trading at $44.69 a barrel. Bonds, the 10-year note down 1 tick, 131.27. 30-year bond up 2 ticks, 171.27. King dollar down 21 ticks at 96 even. The euro is at 111, and the yen is trading at 103.40. That's a big move for the yen once again. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you're at 49 million shares in the SPY. We're down $2.17. Bottom line, we'll see what kind of, that's light volume on the way down. It's going into the lows that were established out here last Friday. That was $216.25. That had 122 million shares. So we'll see how this shakes out in the next hour, because what we did have yesterday, as we closed inside the marketplace, is that we had someone throw a huge amount of volume inside the NYSE. On Monday, we had traded at a price, we had traded 659 million, which was the lowest volume of the year. Yesterday, what we had shake out here is that last 10 minutes, they threw huge volume in because we did 754. And that's 754, by the way, folks. What you had there is that you were pushing into a low and you were pushing with some volume. So today's going to be really cool. The reason being is this, is that right now, if you happen to be watching my screens, we are at the lowest volume of the year, once again, at 3:09. Now, that doesn't mean we're going to be at that, and I don't expect we're going to be at that, because I expect what we're going to see again coming into the close is that you're going to see the sell orders go right back in there, and that's distribution at highs. That's where this is shaking out. We take a look at the NDX 100, the 3 Qs. What do you have with the 3 Qs? 3 Qs, they're rolling over. Now, you get light volume right now. We only have 10 million shares. You're at $116.36. We've hit 115.95 today. Now, what's going to be intriguing here is that the $116.08 was the low that was established with 22 million shares on Friday. So, price and volume, we'll see whether it can hold the $116 level. What I expect you're going to see here, let's go into the NQs and just see how they're trading right now. The NQs, the futures. Okay, so we're at 46.67. It already hit into its lows. Let me put this a little bit closer. I only want 2 days. Okay, so at 2 days of trading, Actually, I'm going to make it 1 day. Okay, so when we shake this out, it's 12 o'clock. Okay, so what you have here, the low for today is 47.51. You're at 47.67. You are testing where we were at 9 o'clock this morning. This looks to me like we're going to go back downtown. Nothing heavy, but I do expect at the next hour inside the NDX 100 to start moving to lower price. Gold contract. What do we have with gold? Gold contract out here today had a high of $1,319, a low out here of $1,302. You've done 163,000 contracts. That looks like about the halfway move down as to where gold wants to go. What I expect we're going to see is this more likely, we'll see whether it's going to end up setting up the buy. In physical, you're talking about 1259. And that's not a bad place to be compared to what these equities have actually done. The equities, if we look at the XAU, the HUI, they're coming up. Take a look at the XAU first. XAU is down to $1.52 out here. And if we bring this back, let me put this back up. And if we take a look at this, let's just see where the 50% retracement is. I think we still have lower to go, but we're getting close. Actually, no. Oh, that's interesting. No, so we're not even at the 0.382 retracement yet of the move. The 0.382 in the XAU is 85. 76 is the 50% retracement. If we go into the Gold Bugs Index, that's down $5, $5.31 right now. We're 222. And if we take a look at that, where retracement is, see, this move up was extraordinary. Okay, so that's approaching 215 is a 0.382, 192 is a 0.50. So bottom line, in both cases, I expect you get lower prices coming at us. Oil, what do we got? The oil market. We take a look at the oil market. What you have is this. They're hitting oil out here this morning. Oil numbers come out. They were higher numbers than the market expected. You have wide price spread. You have accelerated volume, 508,000 contracts. Bottom line, oil wants to make its way into, let's see. So you're at 44.71. 44.12 is the next number. 44.59. Yeah, 44.59. We hit 51. And look, if we get one more day like today and we just get into the 44.50 area, let's say 44.25, which is only 50 cents from here, that would set up a run right back down to the lows. So that's going to be wild watching that whole thing shake out. King dollar. What do we have with King dollar? King dollar right now is trading at a... King dollar right now is at 96.01. You had an expansion of volume today, 23,000 contracts. This is building cause to get up into this 97.62 area. The 97.62 area, that was the swing high that was generated out here on the 25th of July. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Gotta come. You stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down to 66. The Nasdaq's off 12. S&Ps are off 8. Let's go Tesla. We'll go take a look at Tesla right now. So Tesla is trading at $211. What's going to be intriguing here, folks, looking at Tesla, is that there's a story that's coming across the tape here. Now, this would get really interesting. The lawyers are going to have a field day with this, and this is what it is. Let me put this back up here for a second. So in February, it was in February that this is a Bloomberg story. In February, Elon Musk suggested to his cousin that they merge companies they run, Tesla, Motors, and SolarCity. Now, here's the kicker. That is 3 months before Tesla sold $1.4 billion in stock in a secondary offering, and 4 months before Musk made a marriage proposal public. Musk, Tesla's chief executive officer and SolarCity's chairman and largest shareholder, had the discussion with his cousin sometime before February 29th, when Tesla's board was briefed on the idea, which it turned down at the time, according to a document filed Wednesday with the Securities Exchange Commission. That means that Musk and Tesla's board had considered a merger with SolarCity before its May stock offering without disclosing it to potential buyers of the new shares. The merger has been controversial among Tesla shareholders, some of whom opposed the deal and sold the stock when it was announced in June. Tesla shares fell more than 10% on June 22nd, the first trading day before the merger proposal was announced. Some shareholders and analysts have questioned the deal because Musk owns more than 20% of each company. SolarCity had struggled financially, and some analysts have said that its cash burn could be a problem for Tesla, which also needs money to develop new cars like the Model 3 sedan, which is supposed to begin full production in 2017. Tesla, in the filing, reiterated plans to raise more capital this year. Musk had expressed interest in the solar energy as part of Tesla's vision in the past. In his 2006 master plan for the car maker said it aimed to expedite the world's move from a mine-to-burn hydrocarbon economy toward a solar electric economy. It also included plans to co-market solar panels from SolarCity. The bottom line is that what I expect you're going to see out here, folks, he has been Teflon in a huge way, but I expect when you are a public company, we don't have to be a public company. But when you are a public company and you are out there raising money, and you've already had a discussion to merge, that is a material event. So I suspect more than likely somehow this is a late filing because it's like, okay, why did this get filed this morning when in fact this happened last February and they raised the money 3 months before the March, April, May, and they sold 1.4 billion in stock in May. It's pretty wild, shaking it out. So we'll see where that whole thing does shake out. We go take a look at the Dow Industrials, the strength versus the weakness out here. This is what you have. Strength inside the Dow Industrials today is McDonald's. That's up 0.3%. You have Intel up 0.3. Apple's up 0.1. Taken away from it, Chevron is down 1.3%. You have Boeing off 1%. ExxonMobil's down 0.8%. And DuPont is down 0.8%. If we take a look at the XLE, what you have inside the XLE is this. XLE is down $1.27. You do have an expansion of volume. And, sorry, folks, excuse me. And so what you do get, this is what's really pretty cool, folks. We know that we are in a low volume market right now. So when you see a turn in the marketplace, which, the XLE has done, and the XLE also has high volume lows laying out here at $62, $63.50 actually, $63.50. The first one was from May, the second one was from June, and the third one is out here from August. And you do get an expansion of volume, which we did today. Your setup goes that, guess what? XLE wants to make a run down to this 64 to 63 area. If we go take a look at ExxonMobil, down 69 cents. Now, ExxonMobil looks like it's setting up an ABC structure on the way down. Your B point on this is laying out here at 85.58. We've hit 86.22 today. Now, the volume's light on Exxon, but that's building cause. It's building cause to get into that area. It does have a high volume low at $80. Chevron, we take a look at Chevron. What we have with Chevron is going after its swing low also. The swing low we're talking about in Chevron is $97.91. Right now you're at $100, and it looks to me like Chevron is also building cause to get into those lower numbers. Let's go over to the XLF because what we're doing here is that we're approaching good old Friday, folks, job numbers Friday. And this job number Friday is going to be a big deal because of the fact that the way Janet Yellen was speaking, she felt that she had more ammunition in order to raise rates. And the real question is going to be, okay, if they're going to raise rates, is that going to be in December? Is it going to be next year? When is it going to be? Bottom line is that, we take a look at this XLF. It looks to me like when rates get raised, banks are going to be able to make more money on the spread. That being said, the way the XLF is trading into the downdraft from last August, it can't handle it. On a weekly basis, you're talking about 245 million shares. Last week we did 145 million shares. Thus far this week, we've done 100 million shares. We got 2 days left. Let's go see what they're doing per day. Yeah, you get 31 million shares. So we could do like 150 million. So the 150 million XLF once again is going against 245 million as well as 200. No, that's 300. Interesting. As well as 325 million. So it's not only a toss-up. Let's go over to the bonds for a second because the 10-year, it can't handle it. Okay, so now the 10-year is giving us quite a bit of information today. 1 second. TYZ 6. We've done 1.1 million contracts. Excuse me, folks. 130.27. Yeah, so check this out. This is subtle, but this is going to be, well, we still got 45 minutes. This looks like it's going to be a failure, and this is what it is. Last Friday, the 10-year comes down, wide price spread, accelerated volume, does 1.5 million contracts. We got over the high that was established here on Monday. That high is 131.01. We got to 131.04 today. It looks like we're going to close under the 130.41, 131.01. And if that's what we do, that is setting up to go after that lower swing point once again. And that looks to me like that setup is going to be for Friday. Big action Friday, folks. That's what it looks like. You stay right there. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, it's going to be intriguing watching mall owners right now, because this is a new twist that has just come about, folks, inside the large malls. So Simon Property and General Growth, they both are the largest mall owners in the USA. Well, what they just did, Aeropostale went bankrupt. They have 800 stores. They came in last night with an offer. So both mall operators came in with an offer for $243 million to basically take control of that company. Now watch this. This is going to be pretty cool watching this shake out. Because, okay, so picture the Amazons of the world, you and I on the internet on a continual basis ordering things, are basically taking out a huge amount of retail. The amount of stores that have closed this year, well, retail stores this is, okay? The inside malls, this is the largest number of closures since 2010. Now, the bottom line is that in 2009, 2010, well, 2010 had to do with the crash of 2009 and 2008, right? Okay, this is a different ball game this time. What this ball game is all about is that we're shopping on the internet. It's taking bricks and mortars out and taking them out very quickly. So it looks like what the game plan here is, it's a smart game plan too. So check out what it is. They have 800 stores? Yeah, they have 800 stores. If, in fact, the judge lets this go through, what you're going to end up with is that Simon and General Growth will control the leases, because when you go bankrupt, you can can all the leases, okay? And so what the goal is, which they have already told the court what the goal is they plan on closing down the stores that no doubt are not making money. What has happened evidently with Aeropostale is that they do have stores in high-end malls that are making plenty of money. So the foot traffic in high-end malls is huge, not huge. Yeah, it's huge. That they're saying it's huge versus the other stores. So they're thinking that they're going to bring that down from 800 to approximately 300 stores. It's pretty smart, actually. You know, and what you do get, and this is where I think malls in general, the Class A malls are in good shape. Class B, forget it. You know, different ball game. You know, and that's kind of showing its hand. If we go and we take a look at Simon Properties are trading at $215.97. Let's just pull this back a little. We put this on a monthly, and you know, these things have done nothing but gone up. But guess what? It hasn't had volume in years. It's amazing, actually. Yeah, it does. This, you know, when I look at this, like when this falls apart, it's going to fall apart in an incredible way. Now, I can absolutely understand why it hasn't, because this is what ends up happening, particularly in a commercial real estate project. If you look at the Wall Street Journal, folks, what you're going to see is that in the merchandise mall, okay, and the merchandise mall in the Wall Street Journal, and you want to check this out because these are only little tiny ads, okay? They're little tiny ads, and they'll say Publix, Triple Net, Walgreens, Triple Net. Well, those little ads, you can really learn a lot about the commercial business in general, because what ends up happening is that these commercial landlords, what they can do is that they can sell that paper forward 20 years on the leases. That cash flow is astronomical, and what ends up happening in that case is that it's still a land lease and they still own the land, okay? So now let me go to Simon Property. What happens with these large property owners is that because you're still dealing with a market that has low interest rates, as those rates continue to go down, the amount of money that they can save and leverage up is phenomenal, absolutely phenomenal. In fact, this morning what you had in London is that one of the department stores in London just floated a 4-year, I think it was 150 million bond at 1.4%. That's amazing. That is with no collateral, zero collateral. So you can see what can happen in a low net environment. Now, on the flip side of that, I suspect that most of that debt is at very small levels, good levels, and that's why those stocks want to stay higher. What will happen in the future, however, if in fact rates start going up, then they're actually going to have to start making big money on the amount of tenants that are inside those properties versus just some good engineering with the debt structure that's out there. Well, you get the debt structure, and then you get the leverage off that debt structure. So, bottom line, let me go into a couple of these other. Let's see. So we got. Where's general growth? Is that GGP? Let's see if GGP is general growth. Yeah, so general growth's trading at 29.24. That pays a 2.7% dividend. This is a little bit different setup. Yes, this is a lot different setup than Simon. Simon looks like it's just yeah, so when you take a look at this, it's pretty amazing, actually. The stock traded at 60. I remember this is a stock that looked like it was going to go out of business. It actually went down to 17 cents. This is crazy. So this went to 17 cents in 2008. 17 cents. And guess what? It's at $29. Oh, my God. Let me pull this back. So at that level, this looks like it wants to pull back to 21, but that's still quite an experience, no doubt about that. And with the question in the den is that which stores have to close. This is what's so cool about how they're doing it between General Growth and Simon. They'll have that choice, and of course, what's going to happen is that what they will do is that in some of their own malls, if in fact that the stores have low traffic, they'll move that out and they'll move another store in. What I suspect the larger traffic stores they're going to keep in a big way. And there's a question about what is a Class A mall. A Class A mall would be whether you're getting an Neiman Marcus in there. It's higher quality stores, higher quality mall. You can kind of gauge it. It's not going to be the Targets of the world. Okay, except Target and Publix is a good strip mall for smaller malls. Okay, that's not bad. But it's going to be those higher end names, and it's going to be an experience at the same time going in there. What the mall owners are doing now, which is a large change, is that they're trying to put tenants in that you can't order things from the internet. That's whether there's a doctor's offices, they're getting doctor's offices, they're getting gyms, they're getting all of the above. You stay right there, folks. We'll come right back. Dow Industrials right now are down 51, Nasdaq's off 7, S&Ps are off 5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We take a look at a few of the Dow stocks out here. You have Honeywell down 20 cents. Boeing is off $1.34. Let's go over to Boeing. The Boeings, Lockheed Martin, those they're taking some heat, man. So Boeing is down $1.34. We're trading at 129.47. Now this also couldn't handle the top of the consolidation, which was 135. What that sets up a run down to the June 27th area, which is 122. LMT, now this baby here, this is the one that, bottom line, I want to watch really in the next year, and this is why, folks. So check this out. This is only, it's only it's at $243. The high was generated at 266. So it's not that it's a lot off the high, but watch this. This is where it gets amazing. My man, Mr. John Logan, was talking about this morning, who kicks us off at 8 o'clock in the morning. This equity, okay, you talk about coming off a high with some volume. It is monster volume, folks. When you put this, this is always dangerous. You put this on a monthly chart. Today's the end of the month, right? And you're going to see something. You've done 145 million shares. You hit a high and come off it with volume. That is dangerous beyond belief. And so what I expect you're going to see in this is that the next move down, where 243 in Lockheed Martin is, you're talking about 191. And this is an equity that also, bottom line, was a one-way trade. And you talk about one-way. This equity was trading in 2011 at $66. And it goes straight up. Now, when you're coming off a high with volume, it's just so dangerous, big time. Let's go take a look at CTAS for our man Mitch. So this is Cintas. Okay, this company here is in the uniform business. The low is 80. The high is $117. That's today. And let's go take a look at this. He's looking. No, I wouldn't be short in this equity. Okay, so he's looking for a sharp position. So watch this. When I bring this up on a 6-month basis, first off, you get 2 monster signs of strength. Huge sign of strength was on the July 20th. You got an additional one that was on August 16th. Let me put this on a monthly for. So on a monthly, oh, look, check this out. You got an ABC up. Don't touch this, Mitch. You might want to go long. Here, let's look at this. So your A point, this is an ABC up, man. Okay, so your A point is 54.97. So let's just call it 55. I'm ballparking this, folks. Your B point is 94. So we're talking about 39 points. Your C point is 80. $1.29. It's an ABC up to $129. You took out the B point, took it out with monster volume, by the way. So your B point, well, let's see, 14 million versus 16. Yeah, you took it out. In June. Oh no, May. So no, that you do not want to go short that. And as one of the Tigers are saying, it is a economy bellwether. And bottom line is that wants to go to higher price. That's the way that's shaking out right now. We take a look at Big Mac, McDonald's, MCD. McDonald's out here is trading at its lows. You're at $115.79. This here, if we break into the sorry, folks. Excuse me. Oh, my God. This is what's going on, folks. I don't mean to keep sneezing on you. But we have a big storm down here. And it's not that I have a cold, but I think I got soaking on the one coming in this morning. So I just got a little bit chill. But that'll be gone by the time I get out of here. Thanks, Jay. Appreciate it, man. Bottom line with McDonald's. Okay, so we're at 115.74. If you break the 112.87, then McDonald's is going to take some real heat. That'll take heat down to the 102 area. If we go back to, yeah, that's right. I love it. Oh, my God. I'm going to love this world, folks. Let's go over and take a look at the Russell 2000. So we're coming into Thursday. Friday, of course, is the jobs number. We've been going sideways for a long period of time. If we take a look at this IWM, what you have is that we're at 123.48. Oh, this is cool, folks. Guess what? The IWM is talking, walking, and squawking also. And what it is, it's like an expansion of volume. Man, I can't wait to see where this shakes out, meaning in the next couple weeks. And this is why. So we've had the NASDAQ, the NDX 100, very subtly roll over, and you have volume coming down. And it's just so minute, but you're going to lower lows. We had that happen inside the small caps last Friday. And then small caps snap right back. And guess what? You're coming down into that lower price point of the $120.50. And guess what? You got an expansion of volume again. They're unloading this market, man. That's how this thing is set up. Let me go back over to the SPYs. This is going to be wild. So if we take a look at the SPY again, the SPY's holding price. See, this is wild, man. The SPY's holding price. You're only down 63 cents. So the SPY hasn't done it yet. The Qs, however, have. The Qs have still got another 12 minutes coming into it. We're at 13 million shares. You're at $116.46. Even if it trades out right here, bottom line, that's making just a small oval that I expect that small oval. When this breaks and breaks downtown, you're going to see something that's pretty quick. If we go over to the NYSE and we just take a look at it, because what we're going to be looking for is a fast acceleration coming into the close on the NYSE again. We're at 590 million right now, which is still the lowest of the year. On the NASDAQ composite, you're at 1.35 billion, which is the lowest. The composite itself, folks, they'll lay into this at the close in the composite. The composite also being at 5,200. That is right where we were trading. 52.14. We've been at the same place since August 5th. And, of course, the SPY's been at the same place since July 14th. That, needless to say, has been the longest since 1965. What a stat that is, right? This is the longest sideways move with the least amount of price spread since 1965. Might be before that now. That number there that I gave you, 1965, that was as of Monday, and we still haven't moved. So buyer beware. We take a look at the commodities in general. This is what we have inside the commodity business. Natural gas. Now, natural gas numbers coming out tomorrow, 10:30 in the morning. And what's going to be important about the natural gas number tomorrow is this. So we're in Clearwater, Florida. We broadcast from Clearwater, Florida. And we get a tropical depression coming in. It actually started coming in last night. It's been raining all day. I mean, cats and dogs, big time. The wind is going to come in tonight, tomorrow morning. This storm is going up into the Gulf of Mexico. Well, we're on the Gulf, so it's already basically starting in the Gulf. The natural gas number is going to be intriguing because gas looks like it wants to go higher anyway, never mind a storm coming into the Gulf of Mexico. So tomorrow morning, 10:30, these numbers are going to be pretty wild. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 56. You get the NASDAQ off 20. We get the NASDAQ off 7. S&Ps are off 6.5. And don't forget, folks, at TFNN every Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. All that programming, you get right on your cell phone. You go to TFNN.com. You hit Tiger TV. And, of course, don't forget, every trading day, our man, Mr. John Logan, 8 o'clock in the morning, 8 to 9. He goes over all the world markets. Great program, folks. If you want to get set up for the day as to what, number one, has been going on overseas, coming right back to the good old U.S. shores. And if you happen to be in the metals market, folks, okay, what you want to wrap your head around, and don't forget to do this, is that you can go to the Australian market before our markets are open. You can go to the South African market, Johannesburg, so that you can see what those equities are trading. It gives you a huge heads up as to where the buyers are, where the sellers are, and bottom line is that does it make a difference? Yeah, it makes a huge difference, because what you do get is that these equities right now have been doing an ABC structure on the way down. They've taken the B points out. Some of them have a volume, some of them don't. But what I expect we're going to see here, probably in the next 2 to 3 weeks, what you're going to see is that this buy is setting up, and it's setting up really nice because of the fact of how we've come down. Well, first off, how we've gone up from January to June, how we've come back down. It's the equities have been leading the contract down, and actually, when you look at the gold or silver contract, they're not down that much in correlation to the pain that the equities have taken. But I expect that pain is, not over. And the main reason is that this dollar has to do what it wants to do, meaning get into higher price, and then more than likely what we'll have is that the jobs number, I suspect, is going to be decent, and what that would do is that would get the Fed fired up that they want to raise short-term rates, and as soon as the market understands that the Fed wants to raise short-term rates, guess what? The market's going to tank. As the market tanks, the Fed is going to be just like a deer in headlights, like, oh no, here goes the market, it's tanking again. And they claim that one doesn't have to do with the other, it has to do with the other. That's what it comes down to. And what that would do, that would put off the aspect of, when this job number comes out Friday, I expect what you're going to see is it's going to be a hot jobs number. And what will end up happening is that the Fed funds rate for September will go up dramatically. And people think that, oh no, they're going to raise in September. That being said, the market will start tanking. Then that puts it off till December. And then, December, when we're talking about interest rate hikes, that might as well be a century, and it definitely comes back to the aspect of where world rates still are. And world rates, folks, still have not moved, okay? We're at 1.57 on our 10-year. France is at almost 0.2%. Germany is at a negative 1%, well, at 0.1 of 1%. When you wrap your head around that whole structure, what that does is that I do expect that in December, no matter what's going on, that they'll go up a quarter point, and that's not going to kill the market. I think the market's going to have correct the next 6 or 7 weeks. We'll see how far it goes down. We'll see what kind of volume we got, and then all of a sudden, what are you going to have again? You're going to have a very low rate structure, and that low rate structure is going to be around for quite a while. That's the way it looks. The real kicker is going to be our low rates are still much higher than rates across the world. So what that will do is keep juice underneath our U.S. dollar. That's how it seems to be setting up. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning or tomorrow afternoon at 3 o'clock. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.